Thursday, August 13th, 6:49 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. I'm going to go over the S&P 500, dollar cost average investing, buying on the dips, buying on a discount, buying wholesale. My methodology of investing is not to buy at the highs. Buy bullish stocks on pullbacks on weakness. I'm currently in a bearish position on the NASDAQ 100. That's a separate video you can watch. Already have gains. I put that short trade on a few days ago using options for income. But here, this is dollar cost average, buying on the dips, bullish. Whenever I have additional money I want to allocate, the keyword allocate, I don't have to wait for a certain day of the month of having automatic withdrawals. I volunteer when I want to do it to get a better price fill. If I have the account set up to have auto deposits into buying, let's say the 1st, the 15th, or the last of every month, that doesn't mean necessarily I'm buying at a discount. I might be buying at the all-time high. Put the big boy pants on, own up, manage your own money. You have a better long-term gain if you're buying on the dips, strong, bullish positions, instead of buying at the highs when there's a higher probability they're going to pull back. I choose the S&P 500. Again, it's the biggest stock index in the United States. It's the most diversified of the sectors. It has 11 sectors. So instead of me looking for the strongest sector, I'll be invested in them all with one single stock, the S&P 500. So we're looking here at the futures, which is a different than stocks. Futures is a different financial exchange. It trades more hours. Yep, look at this. 20 years of history, S&P 500 futures. Bullish. And then we have retracements, buying on the dips. Current month, all-time new high for the year. All-time high for the history of it. Yep. The weekly chart. Again, we see the trend up. We see retracements, pullbacks, opportunities buying the dip, wholesale, discount. Nice. Well, today is Thursday. Tomorrow is Friday. We're already halfway through the week, and we haven't even taken out the trading range of last week. That green candle, that was the high and low of last week. Big bullish breakout of this consolidation on the left. We have very strong green bullish week. Again, currently, we haven't taken out the higher low. That means indecision right now. The sentiment of the traders don't know what to do. We might have a pullback, retracement in this key level, further back down, maybe down here. So I already have situation awareness, places I'm considering buy on the dip, buying on the retracement. And I can set price alerts, which I have, to notify me when we get to those. That will give me a push notification on my phone. And then I'll look at my phone, and then I'll look at the chart and decide, hey, do I think this is the place where it's going to be turning around, or sit in my hands because it looks like it wants to go lower? Patience. We're looking at the daily chart. Again, this is the S&P 500 futures. It's open right now. It's been trading since 6 p.m. last night, all the way till now. So on the daily chart, the 1 year, you see these massive consolidation areas, these gray labels I have. Yep. And that's what's happening right now. We had this reversal, run up. Yep. Momentum to the upside. We had this red candle, big wick on the top, bearish pin bar, bearish stop hunt, rejection, consolidation. Yesterday, inside candle. Currently, right now, inside candle. Looks like distribution. Distribution is when smart money is selling. Yep, see the word distribution? Consolidation, smart money selling, markdown. Again, S&P 500 is a basket of stocks, 500 publicly traded companies. The word public traded means listed on the stock market, means the public could participate in ownership of the equity. Doesn't mean you have a say on the board directly, especially if you don't own the stock outright. If you buy it in a mutual fund or a stock index like this, you have no vote on it. Okay, so now in the daily here, yep. Again, I have key levels labeled where I'm looking for pullbacks to buy in the dip. This is the cash index, XPX. Cash index, understand the word cash index. This is trading 9:30 a.m. to 4 p.m., the stock index, not the futures. Again, the futures, I get to see more data, more opportunities. Well, looking here on the daily chart, see this blue area, this river, it's a gap. It hasn't been tested nor filled. And then I see these other ones too that haven't been filled yet. Concerning these white vertical lines are the most recent of this Federal Reserve FOMC meetings. If you don't know what the Federal Reserve is, it's also called the central bank. Western countries have them. So yesterday, inside candle. Again, the yellow candles I have programmed simply means didn't take out the high low of the prior candle. It also means indecision. Look, we had this reversal, panic selling here. That was on the FOMC meeting when the Fed voted and left rates unchanged. Panic selling, did a reversal, had a gap up. Gap has not even been tested yet. And now the momentum has not continued going higher. Nope, the momentum is barcoding in a consolidation. Potential reversal or potential bullish flag. Again, I currently have bearish positions, trading bearish short, looking for price decline on the NASDAQ 100. NASDAQ 100 is one of the stock indexes in the S&P 500. I chose that index because it was more bearish out of all the other index I was monitoring. Now we're looking at the intraday, the 4-hour chart, 30 days. 30 days, the S&P 500 futures. This white vertical line, that was the FOMC meeting. Panic selling and reversed. And this is the current situation here. Huge consolidation below the highs of the year. See this red horizontal line? That was the opening of this month. So we're currently above the opening of the month. Spending a lot of time here at consolidation. The market's either under accumulation or distribution. Me, I interpreted it as distribution, smart money selling. Yep, the big institutions are selling a basket of stocks. And I'm participating on the bearish side with the NASDAQ 100. Key levels labeled on the bottom where I'll be looking to buy in the dip if I presume that's a good level. I won't know till it gets there. Yep. Big range. So this, we have what's called summer season, which is ending. A lot of people believe it's less activity in the markets. Well, I'll tell you something. Every single day when the market's open, there's financial institutions that are managing other people's monies. Some called mutual funds, some called hedge funds, some called pension funds. But they invest in and out a basket of stocks. Sometimes they do large positions, small positions. I say that because there's a situation going on where there's been massive rotation the past several weeks for a long time. Usually it's a shorter duration, but it's a longer time. Doesn't mean they're taking money out of the stock market. They're rotating out of certain industries, certain sectors, individual stocks, and putting it into other sectors, industries, of the markets. A lot of it's been going to defensive stocks. That's a buzzword, defensive stocks. There's sectors that reflect that. Those sectors are inside the S&P 500. Again, dollar cost average, opportunities for investing, stock indexes, lower risk than individual stocks that could get delisted, that could get halted. A stock symbol for the S&P 500, Sierra Papa Yankee. Thank you as always spending just a little time with me. That's it for the video. Thanks for watching.